Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video asks the question, will the market ruin the holidays? Plus, I have 10 stocks for you to keep your eye on this week. Yep, 10 stocks because I'm feeling the holiday spirit. This is market analysis for the week of December 19th, 2016. So, last week, the week of December 12th, let's talk about what happened. Well, the Fed raised rates 25 basis points as expected. We did get a sell the news move on Wednesday. On Thursday, we paused, and then on Friday, we continued. Okay, let me blow this up a little bit here to show you. But as you can see here, and this is using the S&P 500, the SPY, it's so far nice and orderly. So why did we sell off? Well, I think it was because it was a sell the news type event. But the excuse was that there was a statement made that Yellen is looking to do 3 more rate hikes in 2017, at least, not the 2 that was originally stated. And the market hates uncertainty. They were expecting 2 more rates. Everything would have been fine, supposedly, but because it was 3, like I said, I don't think it matters. I think we were up into that rate hike. Once the rate hike happened, we were going to get a sell the news type of move. So the real question is this over? Like I just said, this looks nice and orderly for now. I would expect at least a test back to the 20 EMA, but who knows if we're going to even get that far before we decide to turn it. I am in no way, shape, or form ready to call the bull market dead here. There's nothing that says, based on this evidence, there's nothing that says that's the case. Now, V reversals, while rare, although if you look on the downside, you see quite a few of them, although a lot of people called this a V. It wasn't. This was the test of the V. Therefore, this wasn't the V either. Okay, V reversals are rare overall, but at tops, they're extremely rare. Okay, it has to be some unbelievable earth-shattering news on a stock or something like that that just completely puts the high in and spikes it down, never to return. Usually highs are made with testing patterns. So even if this is the high, I expect us to come back and at least try to get there. Maybe put in a lower high here, maybe get the full retest, maybe even go above it for a slightly higher high. I do not think that this is the high because this is not how highs are put in. Yes, trends end in a climax, and perhaps this was the climax move. I don't think so. I think we're going to pull back. I think we're going to saddle up and try to move higher once again. All right. Let's look at the Dow, and I want to look at this time. I want to look at the Dow, the actual cash index here. You can see we came just shy of 20,000. Pretty amazing. But look at this tight little power coil. Again, we could definitely pull back from here, but I think that we're going to probably squirt through here. All right, so, just to go back, to be clear, I'm not saying that we can't pull back to at least the 20 EMA, maybe even go a little bit further, maybe down to the previous breakout point or this breakout point here at 222. But I think when that pullback is over, we're going to turn and go, and we may not even get that far. It's just so I'm clear on that. And like I said, the Dow looks like it's powering up to try to push through, but again, that can also pull back. Russell, okay, same type of pattern. Watch the 20 EMA. It's just below this previous breakout point right above 134. Mid caps look like they're headed to the 20 EMA. Their little resistance is actually below the 20 EMA, so that would keep with the short-term short-term higher highs and higher lows. And the NASDAQ 100, interesting, finally hit the all-time highs on the Qs, 120.50, but couldn't go much further. Went to 121.11 twice, small little double top, and then pulled back. Again, am I saying that's all she wrote? Well, I mean, one of the definite things I'm looking at is a potential work done scenario. Right, the Qs were the only one out of the majors not to hit the all-time high. They finally hit the all-time high. Is that it? But like I said, this is not how highs are usually put in. Okay, the NASDAQ, out of all the indices, the NASDAQ looks like the best argument for a potential high to be in. I'm not saying it is. That's not what I think here. But look what happened, right? The flat consolidation. Okay, we just couldn't get to that high. We couldn't get to that high. Boom, we got there, but nah, right back below it. So this does have the best looking setup if we are going to call a high in one of these. But again, I'm not looking to call a high here. All right, just make sure everything is clear there. All right, let's look at some sectors. The banks, yeah, they're consolidating here. They could spurt up again, or they could pull back. Some stocks to watch, of course, Bank of America, Citigroup, JP Morgan. And these aren't the 10 stocks that I'm going over, by the way. I'm just throwing up some stocks inside the sector. Broker-dealer index. Yep, they look like the banks. Touch weaker on the short term, just a touch. Watch for the 20 EMA be tested there. You got Goldman, you got Morgan, you got like Mason, not really acting so well. But Morgan and Goldman, yeah, they're acting well. How about the semiconductors? Okay, yeah, they have been pretty nice, even with this nice little mini crash move. I mean, it's not a crash, but the hard spike down held the 50-day moving average and just went to new highs. But some issues up here. I mean, like Klatenker, is Intel. It's like a Micron. Okay, Micron rejecting 21. But like a NVIDIA, just wow. Just on the move here. All right, what about the big names? So here's Apple, which had been acting weak. Been acting weak relative to the overall market. But now look what it's doing here. Looks like it may be trying to get back to the highs. Amazon, I did a special video on that pre-election, and that has still been acting, or maybe not pre-election, I think maybe, I'm sorry, pre-Black Friday, pardon me. And that had still been acting, whoa, if I could speak, I'm just trying to get these lines redone here. So yeah, I got to redo the lines a little bit, but the pattern is still there, and it is not showing good relative strength here. Just not showing good relative strength here. So Amazon's still on the one to watch if we do start to pull back. Now look at how strong this 200-day moving average is. I mean, you can't just discount this. Okay, so the longer term trend is obviously up, but definitely some unsatisfied bulls here who were trying to pick this up, especially around the election. Forget about it. They're down since the election. Not a ton, but they're down. But, if they manage to pick up this spike out of here, okay, maybe they're up a little bit. But, yeah, definitely some unsatisfied bulls. Here's Google. Looks like Apple. Looks like it's trying to head back to the highs. Here's Netflix. Similar. All right, so my thoughts, again, just so I'm clear on this. Well, you know what? 1 second. Let's go to bonds. Continuing to get pummeled here. I just think bonds are very close to a short-term low. And by short-term low, I mean a bounce, a tradable bounce. I don't think they're in the low that leads them to new highs. Obviously, the rate hikes are not seen as a good thing for the bonds. Okay, but I just think that they are so unloved and oversold here. But again, I don't have an entry. Same deal with gold. Gold is getting the living snot beaten out of it. You can see I got my own snot that needs to get beaten out of me because I've been sick. But I think that once a pattern sets up here for GLD and GDX, the miners, and I had said the miners had looked stronger, but no signal here. All they did was come up a little bit into the 20 EMA and sold right back down. But I do think gold and miners, if a pattern sets up, they could also be looking at a short-term bounce. Right now, I just don't see it, though. Oil, using the USO here. Yeah, I mean, yeah, it's right now in a big range. A lot of people are trying to, and I read people that are like, oh, oil rallied. You know, to me, oil's just been sideways for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months, whatever it is, 9 months. Yeah, it's setting up in a range here. So it will move eventually out of this. I just, like I always say, I don't know how many days, weeks, months are in it eventually. Okay, but you know, this it could definitely continue to base here and form a range before it moves out of it. All right, so the recap. We did get before I go into the 10 stocks, um, we did get a small sell the news reaction. It wasn't a huge move yet. Looks like we're in a nice orderly pullback across the majors with the exception of the Qs. They don't look terrible, okay, but it's not as orderly as you see like the Russell or the mid caps, right, or the Dow. Well, the Dow is actually coiled up, or the S&P 500. We didn't hit 20,000 yet on the Dow. I think it's coming. It's not that big of a guess at this point. It's not that far away. And the real question, as I've been saying in my email, and if you're not on my email list, you really should get on at attackthemarkets.com. It's free. What happens when we get to 20,000? Are people now all of a sudden going to start buying? It could be another sell the news type of reaction. Maybe the Dow gets there while the rest of the majors lag, and then maybe that leads to a bigger pullback. But right now, it looks nice and orderly, and it looks like another opportunity will be setting up to get long and see if we can retest and or break those highs. All right, let's go through the 10 stocks that I have for y'all. Now, these are all different setups here, okay? The reason that I have these 10 specifically is I want to show you different ways that some charts are setting up. So here is a midstream oil company called Enbridge. Okay, and you can see what happened here. It was going sideways. It tried to lift up. It came down, broke the 200-day, but immediately remounted it. And now it is in, hold on 1 second. I got to get my, sorry about that. I got to get my trend line tool. It is in a coil here. All right, so what I like about setups like this, and I'm not saying that this one is definitely going to be a winner or it's definitely going to work, is I like being able to know exactly where I'm wrong. So if I'm looking to buy this breakout or, especially if it pulls back and then goes, I know that I can place my stop right under here and know that once it breaks the 200-day moving average, that setup is wrong. It may not be that level. It could be a little bit up. Right? I'm just not going to fool around trying to adjust. But that's why I like this setup. That's why these are my favorite types of setups. Not saying it's going to definitely make money. Not saying it's going to work. Not saying it can't stop out and then zoom up. But the biggest part of taking setups is identifying where you are wrong. That's why proper location is the best way to manage your risk. Okay. Activity Brands, AYI. That's in a nice consolidation here, skirting along the 50. Same deal. See if it could pop up. This is a little expensive. Okay, Tesoro Corp. Okay, they're in refining, manufacturing, and marketing. Sorry, so they are actually we showed a midstream. This would actually be considered a downstream. Okay. And this has coiled up right under previous resistance. So see if this can pop out here. Tyson Foods. Here's an interesting one. So let's talk about Tyson for a second. We had this low from the summer. We got the bounce off of it. We gapped down below it. We kissed it. Hello. Went back down, higher low, and then we got through it. So now this is going to be a key pattern to focus on. If we squirt out of here, watch that 50-day moving average, but we do have this gap up here at 67 to watch on Tyson Foods. Okay. Credit Corp, another one, nice little coil here. See where this will go. Here's Rockwell Collins. So Rockwell Collins, big move from 78 to 96. And this stock doesn't usually move like this. So it's a pretty big move. Usually it's doing this, as we see. It's now in a bull flag. So we want to watch to see if this continues. Here's Biorad Laboratories. Now this one I wanted to show you as a potential short for a trade. Just for a trade. Okay, this is too strong to think that, okay, the absolute high is in, but look at this rejection. I like to call this the middle finger move. All right, it's like going up, then boom, the New York salute. See if this confirms. Watch for a trade down to the 20 EMA, and then if it can get going, maybe down to the 50-day moving average. Again, very tough to short a strong stock like this, but this is a reversal candle. This is a reversal pattern. It's a one candle, a one-bar candlestick pattern, but it is still a valid reversal pattern. Here's T-Mobile, nice little power pennant. See if it can get to 60. Pot stock, GW Pharmaceuticals. All right, a lot of talk about the marijuana stocks. I think 2017 is going to have a big focus on a lot of these, but here's one, basically the leader or the strongest one or the most popular one, whatever you want to call it. But this one looks like it is forming some sort of wedge, and if it were to pop up, look for this to go to 150. And then finally, Ralph Lauren. I wanted to show this one because Ralph Lauren is not acting so well. It's a big picture channel here. Hang on one second. All right, so it's in a channel here. These aren't really the greatest parallel lines here, but anyway, here's the pattern right now, and it's been in a pretty nice sized downtrend. And this push down through the 200-day moving average got my attention. If it consolidates, flags here, and doesn't get back up above the 200-day, or just gets above it by a little bit, look for continuation and look to see if it can take out the 2016 lows. All right. Finally, have a happy holiday, whatever you're celebrating. If you're not celebrating any holidays, that's cool too. So just have a nice rest. The market will more than likely, this will probably be the last week of any real activity. Of course, the market will trade next week, but it's not really going to be expected good volume. Okay, Monday, not this Monday, but next Monday will be a holiday. It'll be where Christmas is. Christmas is. I'm looking for the word and I can't find it. And I would love to cut all this out to show you that I'm not this recognized. Well, Christmas will be recognized at least by Wall Street. All right, so have a Merry Christmas, have a Happy Hanukkah, whatever you're celebrating. Any questions, tiny@attackthemarkets.com. Don't forget to sign up to get on the free list. I got a lot of cool stuff coming. Putting together a really nice e-mini course, and we're going to be starting up the daily video newsletter with market analysis and trades and all that other good stuff. So get on the list to get notified. All right. Again, happy holidays, and I will talk to you in next week's video.